Hello, students, and welcome to this second lecture on the Companies Act. It's just a small secondary lecture that includes a few important sections that you also need to be aware of in terms of the Companies Act of 2008. As always, the quote for today is some people are extraordinary because they put in the extra effort apart from the ordinary. I thought that this was quite fitting for this second lecture. As I am preaching for you to do a little bit extra, here I am also doing a little bit extra with you on the Companies Act. Right, so the introduction, this lecture is intended to explore section 27 through to section 33 of the Companies Act of 2008. And these sections are important because they are concerned with rules around financial reporting. The financial year of a company, that is the first part of important information that you need to be aware of. So firstly, we need to choose a financial year end. So a company is not bound, and normally you will find we see February year ends. I've seen some March year ends, June's, September, December. So the initial directors need to decide what the financial year end will be, and that will be set out in the notice of incorporation. In the first year that the year that you actually commence with business, you need to obviously now submit your notice of incorporation, and it starts on the date of registration. So in other words, they need to set it out, and that will be the date of registration. So they need to plan, if we now submit documents this and this date, then it will be ready by June. But you will also find that first financial years are often not 12 months long. They can be lesser, like 6 and 7, etc. So the first year that a business commences will not necessarily have a 12-month year, just because the business started during the year. The financial year of a company can be changed by the board of directors, but then they need to file a notice of change, and such a change may not be done more than once during a financial year. I've not often seen that they change financial years of a business. I think if they keep changing it, the auditors will, of course, ask some questions, or accounting officers who do independent reviews will definitely raise questions around it. But you can change the company's financial year, but of course it needs to be filed again with the Department of Trade and Industry, and then of course it also needs to be filed with SARS. In terms of SARS, that will have a big effect on your e-filing. So it's quite a messy to change a financial year. It is advised that one sticks to the one that was originally selected. Then, in terms of accounting records, the Companies Act states that accounting records should be kept in one of the official languages of the Republic. Accounting records need to be kept at a registered office of the entity and not be misleading or contain deceiving information. It should not be falsified, and it should be kept completely as prescribed. So in terms of this completely, they mean that you need a full set of accounting records. Of course, we know that this is set out by the IAS 1. And it states that we should have a statement of financial position, a statement of changes in equity, a statement of profit or loss and other comprehensive income. And then we should also have the necessary notes to the financial statements. There should be a director's report. There should be an auditor's report. And then, of course, we can have additional reports in terms of integrated reporting, where they can show, for example, BEE figures, gender figures. They normally have little pictures of the directors, and they introduce the directors, say who they are, what their qualifications are, etc. So we need a complete set of financial statements or accounting records. One cannot have just a statement of financial position and say, well, I have kept records at the registered office. In terms of registered office and the Tax Act, the Tax Act says that the accounting record should be kept at the place of effective management. So you would find that that is the term that is rather used in the Tax Act. Right, then annual financial statements. It should comply with IAS and IFRS. This is why we are teaching you to know your IFRSs and your international accounting standards. It should be presented clearly, accurately, and fairly state the affairs of the business. A lot of these factors are addressed by IAS 1. You will remember that in previous years you've learned that you need to indicate the currency, for example. You need to clearly indicate a heading, the type of to show the type of a statement that is presented. There should be comparative figures. If it's a group of companies, they should have consolidated financial statements. So a lot of this is addressed by IAS 1 as well. It should clearly indicate the equity, the assets, the liabilities, the income and the expenses of the entity, together with necessary notes. So again, we have a number of notes that need to be done. For example, we normally have a revenue note, and you have a creditors note, and a debtors note, and a PPE note, and an investment property note. So we haven't taught you all those notes for nothing. Those should explicitly be included in your annual financial statements. Financial statements should be audited when the entity is a public company or a state-owned company, as previously said in the other set of slides or in the previous lecture about companies or the Companies Act. Then an auditor's report should be issued and signed by a registered auditor. So again, if it is necessary to audit the company, so of course this is determined by your public interest score. So if it's a public company or a state-owned company, they don't have a choice. They need to be audited. If it is a private company or it is a personal liability company, of course, we look at those intervals. Is it less than 100 points? Is it between 100 and 350 points? Will it be more than 350 points? So, and if it is necessary to be audited, then you know that you need to have an auditor's report that forms part of the annual financial statements, and it should be signed off by a registered CASA. Financial statements should be audited within 6 months after the financial year end. So in other words, if you have a year end of, let's say, December, by the next June, the end of the next June, so let's say our year end is December 2021, by June, the end of June 2022, we need to have for the financial statements, we need to have an audit report that has been signed and is ready to be made available for the shareholders or anyone else who has access to it to view it. Talking about access to information, it is often asked, but who's allowed to see the financial statements of a company? And the Companies Act sets it out as the shareholders. They may see the financial statements, the directors, obviously, because they have a director's report where they say, we trust that this is a fair version, and they talk about the year and what has happened financially. Then also the auditors, of course, they need access to the financial statements because they need to audit it as such. Then creditors may have access to your financial statements. Obviously, if it's a public company, it needs to be published publicly, so that's not a problem. But in terms of a private company, it states that the creditors can see the financial statements, but only where they are told that you cannot pay the debt to them. So if you are, for example, being liquidated or your business is in business rescue, then creditors can ask to see the financial statements of the company. Same with a trade union. So generally, in terms of private companies, trade unions do not have access to the financial statements. But if the business is being liquidated, or they are in business rescue, or they are in a process where some of the staff will be retrenched, then trade unions are allowed to have access to the financial statements as proof that they really cannot afford to pay the salaries of these workers or these employees anymore. All right, interesting. Some resource that I would like to share with you is a resource that is called IRIS, and this was formerly known as BFA McGregor. And I just quickly want to show you, as you know, I'm very interested in finance and collecting financial information. And if you are interested, I can provide you with a password to log into this Iris Expert. As this video may be posted to a public domain like YouTube, I can't necessarily state the password, but if you are interested, I can provide you with the password and you can play around on this database, and it's very nice. So here you can go and look at the performance of certain public companies if you, for example, are interested to invest. So you can click on financial statements and then you can go and actually draw a history of information for a specific company. So let's say you are, for example, interested in investing in, let's say, Aspen Pharmacare. This might be a good investment in the process of producing and making those shots that we need for COVID-19. So we might want to invest in pharmacy types of companies. So here you can see you've selected your company. Then you can say you always want the published financials. You can go and select you want the statement of financial position, an income statement. You also want an equity statement, a cash flow statement. So, and you can also select a time frame for which you want information. So that can be, let's say, from 2010 to 2019, for example, because information for 2020 may not yet be available. Because, for example, if the company had a year end of December, they still have 6 months into publishing into the new year for publishing the audited financial statements. You're going to say submit, and it will actually show you information relating to this company. So you can see all the information for assets, and you can go and check their turnover in the income statement, turnover, so earnings before interest and tax, earnings per share, deferred tax, current tax, headline earnings per share. So there's a whole lot of items that you can actually go and study here in terms of the financial performance of a company that you might be interested in buying shares in terms of public companies. So you can go and check out this interesting option. It also gives you like other options. I just want to go back. For example, here you can go and look at financial ratios. So if you do a financial analysis, you might be interested in drawing information relating to financial ratios that you have studied now for many years. So you can see in practice they really do use it. Let's say you want to invest in Capitec. It's been a very popular bank recently. And then you can go and see, you can go and select what you want to know about that company. I want to check their net profit margin. I want to check their price earnings ratio. I want to check their liquidity. So I can be interested, for example, in their quick ratio. I might be interested in the dividend per share and in the earnings per share. I might be interested in their operating profit margin. This is a bank. I don't think that they publish financials. Companies don't necessarily publish this, but let's see what we can find. We might be interested in return on equity. So if we select those that we are interested in and we submit, again, you get a little summary of the information that you have asked for. And yeah, as you can see, banks, they don't publish net profit margins and operating profit margins because typically they don't really sell inventory. So here you can see they have their quick ratio, they have a return, an average return on equity, and they've given the dividend per share in cents. So yeah, this is quite an interesting tool. I also know that some of the other items that you have learned about is also available here. I think it might be under financial models, where you can go and look at, for example, these will be models that you were taught in financial management. So again, we're not just teaching you any nonsense. As you can see, in doing research about finance and actually working in finance, you will need this information. So you might have heard of the DuPont model. You might be interested in that. You might want to know what is the average cost of capital for a company. You might want to know what else? Internal rate of return. That's also an element that you should have worked with in financial management. The capital asset pricing model. So you can go and select a company again. What company would we study? Let's look at the local company ArcelorMittal. Let's see what they have available. Have we selected a year or a timing year? I think it's in the next step. So there's the calculatory year that they give you. They had a return on equity of a minus percentage. Their return on assets was negative. Profit margin was negative. Net profit was negative. So this company is not doing too well in terms of the DuPont analysis. If we look at the capital asset pricing model, they have provided us with a leveraged and an unleveraged beta. As you can see, it's very scattered. It's not really forming a straight line. Here we can go and see what is the weighted average cost of debt, cost of equity. As you can see, there was quite a decrease in the cost of equity in 2020. So this is a lot of interesting information that also relates to financial reporting and finding information that I just wanted to share with you, and that you might find interesting to see that these are not just abstract concepts that you are learning about, but it's really out there, and it is really concepts that we use in finance every day. Right, I hope that you've enjoyed this, and then I will definitely see you in our next lecture.